Right, so I'm going to be doing a sort of a live execution. So I'm going to execute live on this video. I'm going to execute live, right? So I want to show you, when we talk about liquidity pools, we talk about fair value gaps, we talk about the things that actually draw price to behave a certain ways. So when I say something that draws price, I mean what are the actual signatures that attract price. So that would be your fair value gaps and liquidity pools. So what's a liquidity pool? A liquidity pool, it is a series of highs, of relatively equal highs, or a series of relatively equal lows. Why is it a liquidity pool? Because many people's stops rest above those highs or below those lows. So it's a liquidity pool. That's where liquidity rests. Okay, so we take this one, for example, this daily high. You can see we had this high over here, this one, this one, this one, this one, and finally this one, right? So they are relatively equal. So it makes it a buy side liquidity pool, right? So we are going to put a text here to say buy side liquidity pool, right? We're going to put it here. No. Yes. So this would be your buy side liquidity pool on a focusing on a daily time frame, by the way, right? So we're going to go down to a 4-hour. So it's like a top-down analysis thing, right? So these are the things that I usually focus on for me to take trades. So it's liquidity pools and fair value gaps. What are fair value gaps? Fair value gap, it's formed by 3 consecutive candlesticks, either to the upside or to the downside. This would be a fair value gap. Okay, from that candle. Oh no, stop it. From that candle, stop. From that candle to this, right? So it's 3 candlesticks, 1, 2, 3. So you have this candlestick. Okay, let's extend this a bit. Stop it. Stop. Yes. Okay, so we look at these 3. 1, 2. This would be a third one, right? So you have this candlesticks high and that candlesticks low, and this one that overlaps in between forms the gap, right? This one that overlaps in between, it forms the gap. So that would mark it as a fair value gap. That is what tends to draw price, as you've seen how it went up and then came back down here and kissed the very bottom, the very low of this upside fair value gap, right? And then started selling price higher. Okay, so that's the idea, that's the thing, that's what draws price. I don't know if you could get another one. This would be a fair value gap as well. Sometimes it does not come back to it, just goes away from it, which is okay. This would be a volume imbalance, which is another gap that I want you to focus on. Volume imbalance, the imbalance between the opening and the closing of two candlesticks. So naturally a candlestick should open exactly to the close of another. So that means, as this one was a bearish candlestick, it closed here, this one should have opened here to create a balanced price delivery, but then it opened here, right? And then this created an imbalance, and then the market came back down to recover this imbalance and started sending price away, which would be a volume imbalance. It's another gap that I want you to focus on, right? And the rest are just fair value gaps. This is a fair value gap, came back down to it. This is a fair value gap, came back down to it. This is a fair value gap. So the market has been going down, and you see this consolidation that you see here. Okay, so going to extend this. We're going to extend this. Right, so this consolidation, because price has been going up smoothly, and then finally got to consolidate at this point. Why at this point? You have this fair value gap. Okay, so the market, usually you are going to get your signals within these gaps or after it has engaged liquidity pools. Buy side, this would be a buy side liquidity pool, engaged it here and then consolidated within this fair value gap, right? If you could extend that so you could see what I'm talking about. Stop. Okay, so you see how it's been going up and finally it stopped there, started delivering price lower, and then did this thing, what it did here, and finally it opened this gap to the upside, came back, retraced it, treated this as an inversion fair value gap. Okay, you could have either entered this or this, still correct either way. That's the concept. Okay, so we are going to execute now at past, or just now. We're going to execute now, employing these concepts that I'm showing you here. Okay, let's go to a 1 hour time frame quickly. This is a fair value gap. Watch how it came back down to it. Okay, let's zoom into this. Going to need a rectangle. Okay, remember 3 consecutive candlesticks, right? So this candlestick's high, this one that overlaps in between, and this one's low. So watch how it came back down here, kissed the very bottom of it, started sending price away. So these are the draws. These are the signatures that draw price. Okay, and then it went for this buy side liquidity pool because it's an old high. Okay, so it would have been this high, this, and that. They are relatively equal, so the market, after it had traded back to this fair value gap to create a balanced price delivery, and it went away from it. And then you also have this volume imbalance here. You have this fair value gap here, this one that overlaps in between. You have this imbalance here. So we are going to highlight that, and I want you to notice how I didn't know that these things were here, but I'm just going through my chart and seeing them and spotting them and highlighting them, right? So this is a fair value gap. Fair value gap is created by 3 consecutive candles. So this candlestick's high, this one that overlaps in between, it creates the gap, and this one's low. So this gap in between, you could see how price reacts when it reacted when it got back inside this fair value gap, right? Look at how the body is close above it to give you a signal of upside delivery. This is also a fair value gap. Watch how it came back down here, it came back up here, and then started sending price down. Watch how it came back also within this gap, started sending price down, finally stopped at this, moved away from this one, taking away this buy side. So basically this is what draws price, right? So we have a minute before we enter a trade. Notice this. Notice how 3 consecutive candles, this candlestick's high, this one that overlaps, and this one's low. Notice how it came back down to this gap and then started going away from it. Okay, you also have this one, came back down here and started moving away. Like, it's a lot. This volume imbalance here came back down to it, started moving away. So there are so many instances where we could point out the reason why price went up or down. Okay, so quickly we are going to go to 15 minutes because that's where we execute, to show you the live thing. So my bias is bullish. I'm going up. I'm targeting on a 4-hour or daily this high. I want to see it engaging any stop that's resting above here, right? So I have this favorable gap. It's still in play. It's still in play, right? So we're going to extend that here. Go to a 15-minute. The reason why it's currently being held, it's because of this. The reason why it's currently being delivered to the downside, it's because of this gap, right? Not because of anything else, not because of support or resistance. No, nothing, none of those things. The reason why it went down from this point, it's because of this gap that you see here, right? So you can already see how price tends to respect these signatures, right? So it came back to this gap and started going down. Okay, so we are interested in upside price delivery, but then when you look at this, it's like giving an idea of uptrend, an uptrend to other traders. So they are confidently buying at the moment. So I would expect it to come back and take out these lows before I could actually anticipate going long, right? So these lows here, they are interesting. It would be lovely to see it engage these lows first. Oh, what's that? 29,564. Right. Okay, so this favorable gap there, it's holding price to the downside currently. So we're going to scroll down to 5 minutes. You can see you also have it there. Okay, it's holding it here. It's holding it. Okay, let's go on a 1 minute. And we are going to sell that. For as long as it keeps rejecting this gap, we are safe, right? So I'm going to sell that. One more. Okay, that was the last one. So let's just wait and see what happens here. So it's going to go down from this point. It's going to take out these stops, and it's going to tell us sell stops below here, and it's going to take the sell stops below here. Okay, so you can already see how it's going down from this 15-minute favorable gap, right? This one. Okay, you can already see how it's delivering price. It's moving away from this gap, so it has already gone up, created the balanced price, and then now it's starting to deliver price lower. It's going to target this stops, and you are going to have a huge reaction when it gets to this point, because remember, we have this favorable gap on a 4-hour, this one, the entirety of this one. So it's going to react here. It's going to bounce strongly from this point, right? You can see how clean that entry was. Those entries were there. So put in trade history, so you could see how clean those entries were, right? Like, that is it is the idea. It is not because of support or resistance. I didn't sell any resistance. I didn't buy any trend line. I didn't sell any trend line breakout. None of those things. Okay, but what I'm showing you here is the reason why price behaves a certain way. Okay, so that's the thing. It is not because of support, not because of resistance. I'm showing you how algorithms actually deliver price, right? And you are seeing it here live in real time. It's the date here, and you can see how clean those entries were. anyone who had their stop loss below here, they are cleaned out, they are out. Okay, so we are also looking for these ones. So if we go to a 15-minute time frame again, as I said, I want to this series of relatively equal lows, I want to see it engaging any one stop that's resting below here. Okay, so you could see how because I open my trading history now, you could see how I've been buying fair value gaps. We have a fair value gap here, and you could see my entries. Okay, it's perfect. Okay, I did say we are going to have a huge reaction off of this because we have the fair value gap on a 4-hour, and also this bullish fair value gap. It came back down to it just a bit, yes, but then it left this whole imbalance here, so that's why it bounced off this area, right? So that's the thing. That is what I'm showing you here. That is what I'm trying to drive your attention towards. I want you to focus, really focus on these things, right? So we have a 1 minute fair value gap here. The reason why it's reacting like that, it's because of this one, of this gap, right? So knowing how to predict price is one thing, and being profitable is another thing. So we want to be profitable. So what I usually do from this point, okay, see how it went back to this fair value gap and started moving away from it? Simple. That's it. Okay, so I want to protect my trades, make them risk free, right? I want to make them risk free. So I was doing this just for the sake of demonstration, to show you what I'm actually talking about, and to prove to you that the things that I'm actually highlighting are real and they're happening in real time, right? So I want to protect my trades. Even if it comes back, stop me out, doesn't matter anymore. It has taken this sell side liquidity. Well, that's just it. Okay. So I put our stop loss just below our entries. All trades are protected. Okay, so I want to see taking out these stops here, and finally taking out these stops here, and then only then I will be interested in the original bias, which is upside price delivery. Because remember, first it has to clear everybody out before it actually goes in a certain direction. The reason why it stopped here, it's because of this fair value gap, and also this 1 hour fair value gap, 4 hours, this one, the huge one. So that's the thing here, that's the top of it. So you can already see this volume imbalance plus this fair value gap here, so the whole of this part is an imbalance. Okay, we have sell stops here. It's going to take them out. Anyone who has chased it going up and bought, because we have real people trading in real time, anyone who saw this volatility chasing it up and put their stops here, they are going to get cleaned out just now. Okay, watch how it stopped there. Watch how it stopped. Watch how it went back to this gap and then went the opposite direction. It filled this imbalance, and then so you can already see how I read price, right? You can already see how I read price. This is the real thing here. It's not because of any support or resistance. No, none of those things. None of those things. Okay, I'm not against anyone who uses that concept. I'm not against them. I'm just showing you what actually drives price. Okay, I'm showing you the things that actually draws price to behave a certain way, and at the time they're most effective. Because also there's the idea of time. These things, they are always there, but there are times when they are most effective and there are times when they are less effective. Okay, at times like this during the New York Stock Exchange, there is a high volume in the market, so they are most effective around these times. Okay, during your news events, they are most effective around these times. Okay, can you be wrong sometimes? Yes, you can, but these are the things that actually drive price. These are the things that actually draw price. Okay, that's just it. Period. And I'm showing it to you live. Here it is. You are seeing it. You are seeing me calling it out in real time. This is the time. South Africa Standard Time. This is the time, and I've executed live on this video, which is going to be later uploaded on my YouTube. And I can do this every day, right? I can do this every day. That's the thing. So I can, anyone who had their stops here chasing this upside movement, they are out. They are cleared. You could see how it reacted after it had cleared everyone here. They are cleared. So for me, I can take out my profits and be done, right? So I could close this trade. Okay, well, let me just let them run, because I've already proved the things that I claim. I've already shown you what drives price, right? So there's nothing much for me here, right? Because I've executed in real time, and my trades are risk free now. Let's just do this. If it comes back, it stops us there. So that should be okay. So if it comes back, it closes, it takes out our stops here. We made profit, baby. We were stopped out on profit. Okay, so the thing about this video, I'm just trying to show you the where price reacts, right? And when is it going to be most effective? You can see how this gap on a 1 minute, you can see how it's holding price to the downside. You can see it, right? You can. It's not because of support, it's not because of resistance, it's not because of a trend, a series of higher highs, series of lower lows. No, none of those things. What I'm employing here, the idea, the concept, which I'm showing you here, is the real thing. It's better than any other retail thing, any other retail technical analysis, better than any of those things, right? So you could see how perfect these entries were, and you could see how price is reacting off of this. Now it's going to treat this as an inversion favor gap, deliver price higher, right? It's done going down. It's done going down, right? So it treats this as an inversion. Now it's supposed to deliver price the opposite direction to what. Okay, it came back to it, right? Filled this gap, delivered price to the downside, took out anyone stop just below here, and then now it went up, closed above this gap. It's treating it as an inversion. It's still an imbalance, it's still a gap, and now it's coming back down to it to deliver higher prices, which it's doing here. Watch how it kissed this gap and then started. Bro, I cannot preach. I don't know how to say it anymore, because you are seeing these things, they are happening in real time, and you haven't seen any chart pattern form here. You saw me execute not because of any chart, but no, we are going to buy this. Okay, well, it left us. As I said, it treats this gap now as an inversion. Okay, the flipped version of what it initially was. Watch how it reacts. from this gap, kissed it, start resisting to go up. This is happening because of that gap, nothing else. Okay, nothing else. Not support, no resistance, none of those things are true, right? They are true sometimes, but those are not the things that draw price. Those are not the things that makes price behave a certain way. They are not. Watch how it, see how it's starting to go down now from this gap. It's not because of any support, not because of any resistance, none of those things. None, right? None of those things. See how it reacts with it, it's reacting within this gap. So these are the draws, these are the magnets in price. Okay, these are the magnets, these are the things that draw price. Not support, not resistance, none of those things. Okay, so I'm just, man, at this point, I told you my original bias was bullish, so I'm going to execute bullish. It's just I'm waiting for the perfect timing, of course, and I'm going to buy, targeting that, go over to a 4-hour daily, this buy side overall, right? Because we have a lot of potential here. We have a lot of stops resting up below here, above here, post NFP, right? So yeah, this was a beautiful trade, man. New York Stock Exchange killed, made it, and that's awesome. Watch how it treats this gap as an inversion, right? Initially, naturally, it's supposed to deliver lower prices, which it did, and then it closed above this signal. It's going to treat it as an inversion, closed above it now, and then came back to it, kissed it, started going away from it. Watch the bodies. It's also going to treat this as an inversion now. If it closes above it, it's going to treat it as an inversion, meaning it should close above it, go up a bit, and then come back down to this gap to retrade to it, and then start going high. That's the thing. Oh my gosh, I'm going to close the video. I'm going to, because I have some things to do as well. I'm going to end this video. Right? Okay, maybe I should execute to the upside as well, so you can see what I'm talking about when I'm saying inversion. Close already, close. It's going to stop here, come back down here, stop there. It's going to come back down here. I'm going to buy it there. It has shown me that it's no more longer going to engage those stops that I highlighted on a 15-minute, the sell stops. It's no more longer going to these lows. It's no more longer going to take them, but instead it had filled this gap, and then now it's going higher. Okay, it had filled the gap. Which gap am I talking about? So which gap am I referring to? This one. Remember I said we look at 3 consecutive candlesticks. So initially this was the entire fill gap, but then this imbalance was left here. Imbalance is what we focus on. So watch how it came back down here and then started moving away from it. 1, 2, 3. This one that overlaps in between formed the imbalance, and it came back immediately after forming this favorite gap, just to a little upper portion, and then which is which was filled here, this gap. That's why it's going up now from this imbalance. So we're going to go back here. I said I wanted to come back down here and then start going up and then buy it, but then instead it kissed this other one, didn't come back here entirely. But yeah, it's going to start going higher now from this point. Okay, there we go. Watch how it came back to this family gap and then started moving away from it. It is not because of support or resistance, no, none of those things, but because of this gap. That's why it stopped here. Okay, so we're going to buy it. I want it to sink more and then we buy it. Sometimes it does kiss it just a little bit like this, as you have seen here. As you have seen here, what it did here. Okay, so this was the initial fair value gap, and then you could see how it came back just a bit within this gap, just a bit here, and then started moving away. Sometimes it does that. Okay, but this was the imbalance that was left behind. Okay, watch how it came back here. I missed the entry. But yeah, this was our entry point. Right, this was our entry point. I could enter buys here, but I like sniper entries. I want to see it moving away immediately from my positions. Okay, there it goes. We're going to buy this one. There it is. Oh no. Oh no. So it overshot it. It overshot this gap, came back to this one, right? And you can see how it's reacting off of this one, right? We could still be bullish. So it was not only interested in this one, but this one as well, right? To invert that one as well. So we are going to add more here because we are buying this one okay. Still, as long as it's within these fair value gaps, it's still within the safe area to buy, right? So it did the job here, and it did the job of this one here, and now it's doing another job of this one, the bigger one here. Right? I want to zoom in. Oh no, that's too much. I want you to notice how it stops when it gets to the tip of the boxes that I'm actually making. I want you to notice how it reacts when it gets to either the low or the high of those boxes. Notice how it reacts from this. It's a fair value gap. It's this one. Okay, it's this one. The reason it stopped here, it's because of this gap here. Nothing else. All right. Nothing else. And the reason why it stopped here and here, it's because of this gap, inversion fair value gap, which was initially supposed to deliver lower prices, which it did. It came back here and then started delivering lower prices, taking out anyone who was there, stop here, and trading to the very low of this entire 15-minute imbalance. Okay, Notice how it kissed you and then started moving away. It's because of this gap, not because of support, not because of resistance. And all this is happening on a 1 minute time frame, right? It's happening on a 1 minute time frame. Look how precise it stopped within this box, right? So at this point, I don't know how to say it anymore. Like literally, I do not know how to say it anymore. So I'm going to close these trades. They are losers. These ones, we shouldn't let our losers run. These ones, they are losers. Watch how it's reacting. No support, no resistance. This is real price action, baby. This is real price delivery. Real price delivery. Real price delivery. And why did it stop here? Why did it stop here? You heard me talking about volume imbalances. This opening should have been here for it to be balanced, but now it opened up a bit up. So this is an imbalance. So if we highlight it, that is an imbalance, volume imbalance. Watch how it reacted here. So tell me now, that's a newly formed volume imbalance. The candlestick should have opened here, strictly here, but it's a volume imbalance also, this one. And I'm annotating these things to you in real time, right? Live in real time. See why it stopped there? It's because of this inversion favorite gap. So favorite gap delivers in two ways. It can either be naturally, okay, which I would call naturally, because we have upside favorite gaps and downside favorite gaps. If it supports higher prices and delivers to the upside, that's good. And then if it's an upside favorite gap delivers to the downside, that's an inversion favorite gap. This is a downside favorite gap, this one, and it's been delivering to the downside, which is good. This is an upside favorite gap, which delivered price to the upside just a little bit and then closed below it, went down, and then started sending price lower. It came back here, it stopped there, went lower. Now it was inverted at this moment, right? It was inverted. So now my original bias is bullish. We have buy side here, relatively equal highs. We have this. Okay, let me remove the trade history. We have this high, we have this, and that, relatively equal highs. So anyone who is chasing the market to the downside, they have their protective stops above these highs, so they are going to get cleaned. As I've said, these ones are going to get cleaned, and they did. So these ones now, they are going to get cleaned. Watch how it stopped there, not because of support, not because of resistance, but right. Right, so this it's not a strategic approach. What I'm showing you here, it's not a strategy, it's a concept, it's a language. It's how price is delivered algorithmically, right? Price is delivered by algorithms. They do the same thing over and over again in different ways, but overall it's the same thing, right? So this is the algorithm here delivering price. It's the algorithm delivering price. It's not it's not support, it's not resistance, none of those things. And these concepts, they are applicable on whichever time frame you want. Just on a 1 minute, you get much more precise entries. On a 1 minute time frame, get much more precise entries than any other. Watch how it kissed this box, and then it's this. Not support, not resistance, it's this. Now it's going to engage anyone's stop loss that's resting above here, anyone's stop loss that's resting above here. Watch this. It's not because of any support or resistance. What happened here? It's this plus this. Right. See what happened here? It's because of this guy over here. What happened here? It's because of this guy over here. Okay. Watch how it kiss it and then start moving away. Okay. Kissed it. Now it's moving away. It's because of this guy over here. It's a fair value gap, not because of anything else. I don't know if you could actually understand what I'm saying to you here, but you should see, right? So now it's going to take out anyone's stop that's resting above here, anyone's stop that's resting above here, and it's going to go up overall, take out the stops on a 4-hour perspective. These ones, anyone who has their stop here, they are going to get cleaned the fuck out, right? So it stopped here because of this 15-minute fair value gap. This guy over here. These ones are just micro fair value gaps on a 1 minute time frame to give you much more precise entries. But when you look at it in a 15-minute, you would have just entered here from this gap and then watched the rest of the move happen. You wouldn't be interested in anything else, right? So yeah, guys, okay, let's wait for it to take out these stops and then we'll close this video, because at this point I've shown you the concept. So it's a language, it's a concept, not a strategic approach, but a conceptual approach, right? It's going to come up here with speed, very fast. So let's highlight this. It's buy-side liquidity. Buy-side liquidity pool, meaning anyone who has their protective buy stops here, who are selling the market and they have protective buy stops, the buy stops over there, they are going to get cleaned. Make it straight. Wow, that's good. Not exactly straight, but it's okay. Watch what happened there. Because of this guy. Inverted. The inverse of a fair value gap. The inverse. But does the same thing, just to the unnatural way. Inverse. Right? Oh no. Could you stop? It's going to come here with speed. I feel like I shouldn't make this video public, because now it's like anyone who gets to see this video, they are seeing it for free and they're seeing everything. Like, I'm showing them the correct way on how to read price for free. Nah, I think this video should be private. So if you are seeing this video, lucky you. If I'm showing you this video, lucky you. Yes, I'm going to upload it on YouTube, but I might as well make it private. I don't know. I'll think about it. Okay, so watch the speed, how it's going to take out these buy stops, relatively equalize this, that. So it seems to other people this is resistance. It's not resistance. The thing that's been holding price here, it was this fair value gap. That's why price has been held here for some time. It's not resistance, right? So you can see speed. I told you, speed. So now they are cleared, right? So what I do at this point, I protect my trades, because reading price is one thing and being profitable is another, right? So what matters is being profitable. So now my trades, my trades are risk free. Don't want this. I want that. Which one haven't I protected? Now my trades are risk free, ladies and gentlemen. This fair value gap on a 15-minute, this one, it's going to be treated as an inversion, which is going to now support higher prices, right? So that was amazing. I think I'm going to close this video, though it's going to be highly volatile from this point. So I'm going to leave these trades running, and then you'll check for yourself the aftermath. Good. Oh, this is beautiful. Wait just a second. I told you it's going to come up here with speed, and it did that exactly. So what do you have here now? Right, I don't know if you could see, but yeah, I'm going to close it now.